Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Mrs. Bella Makgetla, and this lesson is brought to you by the Northern Cape Department of Education in collaboration with Pagama Research and Development. On today's lesson, we will be focusing on revision and we'll be talking about financial statements, all right? So by the end of this lesson, you should be able to do the following. You must know the structure of your paper one. You must know how to approach each question relative to our financial statements, and then you must know how to handle the adjustments affecting our financial statements. Know how to correct the errors and address omissions to determine the correct net profit after tax. Okay, so here are the exam tips that you need to be able to do when you are approaching this question. So the first thing is that you must master the formats of the financial statements. If you don't know your formats, then you are losing out on marks. So make sure you know the format of your financial statements. You must know how to use the formula sheet. So as soon as you start on the question paper, you start now labeling your formulas at the back of your question paper so that it's easier for you to do the calculations and save a lot of time. Okay, then you must try by all means to use the time allocated per question. So if the examiner is giving you the time allocation there, try to stick to that particular time. Hence, you have to practice your time management as you are practicing for your paper one. Then try to attempt all the questions, and then try to attempt the questions that you are confident in first. So you do what you know first. As soon as you realize that this question is more complicated and you don't know it, move on to the next question. You will come back to it so that you get the marks that you actually would have gotten, rather than wasting time on questions that you don't actually understand. Okay, so attempt the questions first, and then you'll do the more complicated ones at a later stage. Also, try to work as quick as possible. Show all workings in order for you to earn part marks. It's very important for you to show your workings so that you are able to accumulate maximum marks. Okay, then please also remember that your fixed assets, right, and your inventory, they are examinable in both paper one and paper two, right? And then in your internal control on fixed assets is tested only in your paper two. However, expect to see some questions that are relative to your fixed assets and your inventory, especially the different inventory systems. Okay, so inventory, focus on the calculations of the value of closing stock, or the stock deficit and stock loss. Okay, so that is the relative questions that will be tested with regards to paper one. Now, let us look at the structure of your paper one. Now, the structure of your paper one can be structured in 4 different ways, and this is the one way they can actually test it. Now, your question one will consist out of your comprehensive income and your statement of financial position. So the main difference between the structures is actually your question one. Everything else remains the same. So you will be tested on the statement of cash flow and the financial indicators, which will be plus minus 35 marks. You'll be tested on your interpretation and analysis of financial information in your question 3, and that is normally plus minus 45 marks. And then you will also be tested on auditing and corporate governance, plus minus 16 marks, right? And then your total for your paper one will be 150 marks. Now, a different approach, or the different way they can actually test your question one, can be your statement of comprehensive income with the notes. So you have to know all your notes when you are dealing with financial statements. And as I've already highlighted, your question 2, 3, and 4 will remain the same. It will be the cash flow statement and financial indicators, your interpretation and analysis of financial information, audit, and corporate governance. So that will remain the same. And the total, obviously, as I've highlighted, is 150. Then the third way they can test this, still, the difference is in your question one. The examiner can give you the correction of net profit after tax and the statement of financial position. So it could be the whole statement or portion of it, depending on how the examiner wants to test that. Okay, then the total will also be 150 marks. So the total remains the same. Then the different way or the last way, which is the fourth way, they can give you the statement of financial position, which is the balance sheet, and notes only. Then you must be able to apply the relevant amounts and apply the relevant calculations for you to complete that. Okay, make sure you know your formats, grade 12. You have to know all your formats for you to be able to get the marks that you deserve or the maximum marks that you could have possibly gotten. Okay, so we are going to simply start with some adjustments that are relative to both the statements, right? So the first thing that you need to calculate over here, you need to calculate the cost of sales. And they've given us information over here. They've given us our sales, and the adjustment says the business uses a mark of 120% on cost of the bicycle. Trade discounts totaling 336 have been granted and recorded. So you have to look for the cost of sales, right? So I'll give you 3 minutes to quickly attempt this question, and I will see you in 3. Welcome back, grade 12s. Now let's quickly look at this. Now, this is the situation. Our sales have been given to us, right? And then the business uses a markup of 120%. Okay, we've got the markup on the cost of bicycle. The trade discounts totaling 336 have been granted. So that means that in a normal or in a perfect world, if there was no discount, we were simply just going to use the markup to calculate our cost of sales. But because we've issued discounts, it means that we've sold some items less than our markup. Okay, so before we can actually calculate our cost of sales, we have to calculate how much the total sales would have been if we had not granted the discounts. And that amount is going to lead us to be able to calculate our cost of sales, because our cost of sales did not change. The only thing that changed was how much we are selling it to the customer for. Okay, so then what are we going to do? We are going to add back our discount so that we find out how much it was supposed to be. Okay, we get the correct amount first, the actual amount it was supposed to be. Then, so we'll say the sales, and then we add our discount, and then that will give us 21,353,200,000. Okay, so that is what we have there. Then only we can calculate our cost of sales. So we can use the markup to do that. You know how it works. The sales is always 220. Our cost of sales will be 100. And as they've said, our gross profit is going to be 120. So 120 plus 100 will give me my sales because we are selling at a markup. Okay, so then I will say I'm looking for my 100, and they've given me 220. Then we multiply that by the amount that we've just calculated over here, which is the actual sales amount it was supposed to be. Okay, and then that will give us this value. This is our cost of sales. So then what do we do? Because I know my format, I know that cost of sales must be in brackets, okay? Because it's reducing my sales amount so that I can get my gross profit. How much profit have I made from selling goods, okay? So then I will substitute 9706,000, and then I can now calculate my gross profit because my gross profit is my sales less cost of sales, okay? So then I will then find 131,120. Okay, so that is how we calculate. Remember what I said, that your sales is going to be the amount plus your markup. The cost of sales is always 100 and your markup is 120. When you add these two, it should give you that amount. Okay, so this question can be asked differently as well. You can be looking for your sales amount, and the cost of sales could be given. So you must familiarize yourself with this type of question for you to be able to get maximum marks. Okay, so then that is how we approach that question. Now, our next adjustment says the following. They've given us our trading stock amount, and then they said that the following information was obtained after the physical stock count of the first in, first out method. This is used to value the stock of the bicycle. Purchases for the year were as follows. So this is the purchases for the year, and then we need to calculate now the stock on hand. Okay, so I'll give you 4 minutes to quickly attempt this question. See you in 4. Welcome back. Let's quickly do this. So it says there were 1,009 bicycles on hand, and we are interested in our physical stock. Okay, we are interested in how much trading stock we actually have on hand, and that is the number of bicycles that are on hand. They said we are using the first in, first out method. So when we are using the first in, first out method, it means that whatever we bought last will be the last items that we are going to sell. So if we have actually purchased bicycles, 740 bicycles, it means that 740 bicycles would be the last bicycles to sell. So that would still be available in the business because we only have 1,009 bicycles left. Okay, so some of the bicycles we purchased in September will also be still there because that would accumulate the 1,009. Okay, so when we read further, please, grade 12s, whenever you are reading information, don't just read the first line and assume that that is the end of it. There's a reason why the examiner is giving you additional information to take into consideration. So it says 40 bicycles purchased in January 2023. They are talking about these bicycles, okay, were returned to the supplier due to factory faults identified. The number of bicycles were stolen and must be recorded as a loss. Okay, so we also have some stolen bicycles as well. Okay, but nonetheless, let's quickly look at this. So here's the story. We have 740, and they told us that 40 was returned back. So it means for the purchase of January, we are dealing with 700 bicycles. Okay, so whenever we are doing our calculations, we need to take that into consideration. Be careful and read grade 12 because this is something that you normally forget. So pay very special attention when it comes to this particular aspect. Okay, so this transaction is obviously going to affect our statement of comprehensive income, and it's also going to affect our statement of financial position because we are dealing with the trading stock, we are dealing with inventories. So inventories will then be affected, okay? Because we've made a loss or we have a deficit, then that would be affecting our statement of comprehensive income, right? Or if we had a surplus, then it would affect our statement of comprehensive income. However, it would be under the other operating income section. As you can see, that our deficit is indicated under our expenses because we have lost that stock. We have stock that's missing. So the calculation of our closing stock, right? This is the physical stock. Normally, the examiner in some questions, they've already given to you this amount. Now, the difference between that type of transaction and this transaction is the fact that the examiner did not give us this amount. However, they've given us enough information to be able to calculate our physical stock at the end of the financial year. Okay, so I've already highlighted the 700 bicycles that were purchased in January. So it means we are going to then calculate the value of those 700 bicycles because remember, we have 1,009 on hand. So we're looking for the value. Okay, let's quickly go back. Sorry about that. The price for those bicycles is 2,100. Okay, so that's why we multiplied by 2,100 over here. And then that will give us the amount. Okay, then we said 1,009 less the 700 that we've already accounted for means that we have 309 that is coming from the previous month's purchase, okay, which is the September. Yes, September. Okay, so then let's quickly do that. We are going to say the price is 2020, and then that will give us the value for September. Well, some of the bicycles that are still left. Then you add the two values, and this will give you your trading stock, physical stock amount. You have it. So it's very simple. What do you do with it? Normally, you just say 2094180. So why am I opening the bracket and not writing it over here? Because sometimes the examiner gives me another transaction that I need to report under inventories. Our inventories, we only report what is on hand. So in this case, we've got our trading stock on hand, right? And we also have to have our stationery or consumables on hand. Please don't forget to add the stationery and consumables on hand, okay? For you to get the total for this value, okay? So if there's no other on-hand amount, then I will obviously write the amount over here, 180, okay? So then comes the other aspect. I've indicated what's happening in my statement of financial position. I simply just copy and paste the on-hand amount, right? So then I have to calculate the deficit or the surplus. So what do? I take the amount in my trial balance, right? And then I subtract the on-hand amount. Okay, and that will give me my deficit. Okay, so I already have my on-hand amount, 2094180, and then I quickly go and check my balance over here, 2,125,380. 2,125,380. I find the difference between the two, right? Once I find the difference between the two, I will get my 31,200. And that is how we calculate. Okay. So let us move on to the next transactions, grade 12. So over here, we've got a transaction. They've given us our fixed assets. As you can see, right? The examiner might give you fixed asset type of questions, right? So we've got our opening balances over here, or some of the balances, if I may put it that way. And then it says calculate the profit or the loss and sale of an asset, and you should also calculate the depreciation for the year. Okay, is there any additional information? Yes, there is additional information over here. It says the bookkeeper calculated the total depreciation of 328,200 before taking the following into consideration. So the most important thing is that you must take note of how the statement is phrased. We have calculated depreciation, yes, but the bookkeeper did not take these transactions into consideration. Okay, so you are adjusting the amount of depreciation whenever you are calculating the depreciation question. Okay, so then I will give you 4 minutes to attempt this question. I'll see you in 4 grade 12. Now, we have our fixed assets given to us in this question. So it says vehicles, accumulated depreciation on vehicles, equipment, and accumulated depreciation on equipment. So the information relative to the fixed assets question is provided. Then you will see it says what is required from you is to calculate the profit or loss on sale, and you should also calculate the depreciation for the year. All right. Then the examiner has given you information. The examiner says The bookkeeper calculated the total depreciation as 328,200 before taking the following into consideration. It means that these two transactions have not been taken into consideration when they were calculating this total depreciation. So what are you doing, grade 12s? You are adjusting the total depreciation. Okay, then you will see they've given you the depreciation methods and you are going to calculate that. Okay, so then I'll give you 5 minutes to simply calculate the two required questions there. So then I will see you in 5. Welcome back, grade 12s. Now let's quickly look at this question, right? The first thing that the examiner requested from us is to calculate the profit on sale of an asset, okay? How do we calculate profit on sale of an asset? We say our selling price less our carrying value to date, okay? So what does that mean? It means that we have to calculate the depreciation for this current year for the number of months that we've actually had this asset. Because the information that's given to us here says that an all delivery vehicle with a carrying value of 170 on 1 March 2022 was sold for 140 on 1 December 2024. Okay, so then they also say that our depreciation is calculated using the 20 diminishing balance method, and it's going to be 20%. Okay, so then how do I then approach that question? I will say my 170, this is my carrying value. Why am I using carrying value and not cost price minus accumulated depreciation? Because diminishing balance method normally states it's the carrying value multiplied by the rate multiplied by the time. Okay, so the carrying value is cost price less accumulated depreciation. That's the diminishing balance method. So fortunately for us, we don't have to do this calculation. The carrying value is already given to us. Okay, so then I will take my carrying value of 170 multiplied by 20%. I've had this vehicle for 9 months. How do I know that I've had it for 9 months? It's because when I start counting, it says it was sold on 1 December. Okay, so meaning that we've had it from March, April, May, June, July, August, September, October, November. The 1st of October, we did not have, 1st of December, we did not have it. So for the December month, the asset was already gone. So that is why it's 9 months. Okay, so then I will then say that my depreciation for that 9 months was 25,500. And now I can actually talk about my depreciation or carrying value to date. I need to adjust my carrying value because it still includes the amount for depreciation for this year. So I will say 170 less 25,500, which is the depreciation for this year. Okay, then we can simply carry on with our calculation. Our calculation says our selling price, they say they sold this asset for 140. And then we've adjusted our carrying value, and then we subtract our carrying value, and then we get our loss. Do you see that it's a negative? And if it's a negative, it's indicating that we've made a loss. Okay, so then how do we record this specific loss? We record it in our statement of comprehensive income, and then we will have it as 4,500 under the expenses. Now, another thing that I'd like to highlight is the fact that when we are dealing with our statement of comprehensive income, it's not necessary for you to put the negative signs in your statement. The only place where you put your negative signs in your statement is when you are writing under operating expenses in your cost of sales and interest expense. Those are the 3 places where you are going to have, actually, the 4th place is going to be your income tax for the year. So those are the only places where the examiner is expecting you to have a bracket or a negative on your amounts. No other place. Okay. So we've made a loss on the sale of an asset and we wrote 4,500 over there. Okay. So the next calculation is the calculation of depreciation for the year. Now, we know that when we are talking about depreciation for the year, we are talking about the total depreciation. Okay. Now, the total depreciation means that we have to adjust the specific amount. We've already calculated the 328,200. Okay. That is the incorrect amount. Okay. Then we have a vehicle that we sold, right? And then we calculated the depreciation for that. Sorry, GC 25,500. Okay, that is the depreciation for the sold vehicle. Okay, and then after that, we have a vehicle that we have bought, right? It says it was a trade in. Let's quickly go to our information so that we are able to see what I am talking about. Pardon me for that. It's actually equipment. An alarm system costing 48,000 was installed on 1 August 2022. So they installed an alarm system in one of the vehicles there. So then obviously the alarm system then increases the cost price. So we have to calculate the depreciation of the alarm system. Okay. So as you can see, I've given you the calculations of calculating the alarm system of this particular item. Okay, so we said 48,000 multiplied by 15% multiplied by 7 over 12 because I've had it for 12 months. Okay, 7 months. Then you add the 3 depreciation amounts to give us our total depreciation, meaning the depreciation for the year. Then it means that under our operating expenses, we are going to have a loss, our depreciation for the year of 357,900. Okay, so that is how we are going to indicate it in our statement of comprehensive income. Now, the next activity, we are talking about a loan, right? Now, let's go on to this calculation. We are dealing with the loan. And we are going to look at the information that's provided to us. It says the balance in totals of for 28 February 2023. And it's a loan. They gave us the amount at the end and at the beginning. The examiner has given us information. So then I'll quickly just give you 4 minutes to try and complete this question. And then I'll see you in 4 minutes. Welcome back, grade 12s. Now let's quickly look at the information that's provided for me. It says the loan, Saturn Bank, all transactions with respect to the loan were recorded, okay? The interest of 142,250 on the loan is capitalized. A fixed monthly installment, including interest, was paid in full, and the capital portion of the loan will increase by 10% over the financial year. Okay, so what would we do in this regard? We have to, if the examiner is asking for the statement of comprehensive income, then we would have to write our interest on loan in the relevant space where it says interest expense. So if you have other interest expenses, then you would probably have the amount over here, the 142, and then you add other interest expense, interest on overdue account and interest on overdraft and so forth. So you would have that calculation over here, and then you would write the final amount. But in this instance, this is the only interest they've spoken about. So we'll quickly just put it in the relevant space, which is the interest expense column in our statement of comprehensive income. Now let's quickly get to how we would actually show it in our statement of financial position. Now, the first things first is to actually open our brackets. Now, the biggest thing when it comes to the loan, what is the difference between the non-current liabilities and the current liabilities respective to the loan? Now, the loan we will owe a particular amount, right? So we are separating our current portion, which is what we are going to pay within the same financial year, well, within the next 12 months, and what is going to be paid from the end of the next financial year onwards. So this would be more than the financial year, okay, more than 12 months. And then this will be paid in this financial year, okay. So perfect example would say if we owed an amount of 100,000 and we are only going to pay 20,000, it means that we are going to separate the 100,000. And then in the long term, meaning in the loan, we would have the 80,000. And in the short term, we would have the 20,000, but we are still owing 100,000. So that's the logic behind it. But regardless of that, let me quickly go back to our example over there. Okay, so our example is saying that we are still owing this amount, okay? The 1,159,000. Okay, so very simple thing. We already know what's happening there. So we already have the amount. They've said that the loan has already been recorded. So this means everything is okay. So if it was not reported, then you are going to use the amount given to you in this information, the end amount. Okay, so you always use the latest amount. And obviously the latest amount is the one that is coming from the bank. Okay, so in this case, we've already recorded the amount that's coming from our statement, hence why we can use then our end in our trial balance or in our list of balances. So I'm going to quickly just copy that. Okay, I'm going to copy that amount over here, 1,159,000. That's the first step. Now the next step is to calculate the repayment. How much are we paying out of this amount that we still owe? Okay, so I just want to quickly draw a T account over here. They said our loan is capitalized. When we are dealing with the loan, we are dealing with the liability, as you already know. On the credit side, our liability is becoming more. On the debit side, our liability is becoming less. Okay, so what's given to us is the balance at the beginning. Our balance at the beginning is given to us is 1,280,750. And they've given us the balance at the end. So then I'll say balance brought down is going to be 1,159,000. Okay, then that would mean I have my balance carried down of 1,159,000. Okay, so the next aspect is that they've given me my interest. Okay, so I'll quickly just then put in my interest. And remember, my interest is capitalized, right? So it means I'm capitalizing my interest over here for 142,000. Okay, so then I have to then calculate the repayment plus interest, because when we repay, we are repaying the amount with the interest, meaning the money that went out of the bank account. Okay, so how are we going to approach that? We are simply just going to add the two amounts over here. That will give me my 1,423,000. 1,423,000. Then I'm going to get then my bank amount. Now my bank amount is 264,000, as you may have calculated. But this amount is what? It's my repayment plus interest. And what am I looking for? I'm only looking for my repayment so that I can then subtract that amount from here. Okay, so over here, all I want is my repayment. That's what goes in here. And I know that that same repayment is the amount that's going over there. So then I'm going to say, okay, I've got the 264,000. I'm going to less my interest because I know that my interest is the same, right? That's the interest that I've paid. So then that will give me 121,750. This is the repayment that I've made in the previous financial year. Okay, now we need to read the information provided there. Okay, what is the information saying about my repayment for the next financial year? It says that the capital portion of repayment will increase by 10% over the next financial year. And that is what we are looking for. What we are going to pay in the next financial year. Why are we looking for the next financial year? Because we need to separate it in terms of liabilities. The liabilities that's going to be more than the financial year versus the liabilities that is within the next 12 months, current and non-current. Okay, so then I will have to say then my repayment of the previous year is increasing with 10%. So 10% is going to be the 100% that we were paying last year plus the 10% increment. So that will give me 110, and that will then give me my repayment. And how much is my repayment? My repayment for the next financial year, let's quickly press it, 121750 multiplied by 110% gives me 133,925. Okay, so in the interest of space, because I know you don't have much space, you will just simply say 121,750, because you need to show your calculations grade 12 multiplied by 10%, and then you can give me the amount on top, 33,925, and then you can give me the final amount. And I know, what am I doing with the repayment? It's moving from long term to short term, right? That's the current portion of the loan. So I must simply just write it there. There I have it. Then I need to then subtract. I'm going to say 1,159,000 less what I'm going to pay within the next 12 months, 925. And then that will give me 1,025,075. Now, I just want to highlight something. How much am I owing with regards to my loan? I am owing 1,159,000. Okay, that's how much I'm owing. But then I've separated it. Now, if I quickly look, I add my loan amount, the 1,025,075, with my current portion, 133,925. You will see that it's leading me back to the original amount that I owe. But some I'm owing for 12 months, the other I'm owing for more than the 12 months. And that is why I've separated. Which principle am I using to do this? Remember, we are guided by the GOP principles when we are preparing the financial statements. So in this regard, we are dealing with the materiality principle. Okay. So that is how we approach the loan question. Now, I just want to quickly say something. You will see that it's a very long calculation, but there is actually a shorter way to actually calculate this. What do? You will simply just say the beginning amount less the end amount. That will give you how much you have repaid in this financial year, not the next one, the previous financial year. So then I will say the amount in the beginning was 128,000,000, and then I'm going to subtract 1,159,000, and that will give me 121,750. Do you see that this is the very same 121,500? Okay, then what do I do then? They said it has increased. So therefore, I will get my 133,925. So this is the shorter method. This is the longer method. However, you are getting to the same calculation. But because with time, accountants, we need to have shorter methods, we have to consider being able to do this. Be very careful of the amount that's given to you so that you are able to work back to the original amount that you need to get back to. Okay, now let us actually go into a different type of question, the different way that the examiner can ask question 1. Now, that is when the examiner is asking you to correct the net profit after tax. Okay, so when you're correcting the net profit after tax, it still affects your statement of financial position. Okay, so it's very important for you to know that so that you are able to get maximum marks when it comes to this type of transaction. Okay, so it says there, Lizzie Ltd, this information relates to the financial year year ended on 28 February 2025, the business sells luxurious electrical items. Okay, so the first activity that we are going to do, we are going to deal with our fixed assets. So they've given us our fixed assets at carrying value, and then you have to calculate now the depreciation, obviously, but also you must be able to identify that we have sold a vehicle as well. Okay, so how are we actually calculating the depreciation method? We are actually calculating the depreciation on diminishing balance method. Okay, so with that, I will give you 5 minutes to quickly calculate this question. See you in 5. Welcome back, grade 12s. Now let's quickly analyze the information. We have sold something, and obviously some of the things have actually depreciated. Okay, so let's take that into consideration. And remember, they have given us the fixed assets at carrying value. So we calculate what we need to calculate. Okay, so remember how we calculate our profit and loss on the sale of an asset. It's the selling price less the carrying value to date. That means that we need to calculate the depreciation for this financial year. Okay, so therefore we are going to say the 148,000. Where am I getting the 148,000? It's given to me here. Do you see that is the carrying value that's given to me? So be very careful when you are reading the information. Okay, so 148,000, the carrying value is given. So then I will simply just say multiplied by 15 multiplied by 9/12. That gives me 16,650. That is the depreciation for this current date or currently. Then we are going to say the profit or loss on sale of an asset is the selling price less our carrying value to date. So what do I do to calculate that? I'll say 148,000 less 16,650, and that will give me a negative. So remember, we are adjusting our net profit. What does adjusting my net profit mean? It means that I need to correct this specific amount. Did you see that? So this specific amount is incorrect, and then we have to make adjustments to actually fix that amount. Now, that is where you are going to put the negatives and the positives. You will see on the question will guide you that you must indicate it using a negative or a positive amount. Now, as I was saying, that the loss on sale of an asset is reducing our profit. So we are going to say negative 5,850, and that's how it works. So whenever we are dealing with the correction of the net profit, we need to understand that we are approaching it from, is the profit overstated in this case? And if it is, it means that we need to subtract. If it's understated, then obviously we need to add. Now, in this case, the expense was not calculated with the correction of the net profit that's provided there. So hence we need to subtract it because it was not reported in the first place. Okay, so let's quickly do another adjustment. Or we're still there at depreciation. Let's continue there. So the depreciation for the sold one, we've already calculated. However, there is a new vehicle that has been purchased. So then we are going to say 180 multiplied by 15% multiplied by 3/12, and that will give us our 6750. That is our depreciation for the new. How much is our total depreciation for the year? Our total depreciation means that we need to say 16,650. We added with the 6,750, and that will give us our 23,400. Now, the question that I'm asking you, grade 12, is that increasing or decreasing our profit? In this case, our depreciation is an expense and it was not reported. Hence, we need to still subtract the expense because it was not subtracted when calculating this net profit. Okay, so whenever you're dealing with fixed assets, you must take into consideration that there are two things that you need to show in your statement of comprehensive income, or rather in our net profit before tax. You need to take into consideration the profit or loss on the sale of a particular asset. And then you also need to take into account the depreciation of all the assets. Okay. So then how would you then indicate in our statement of financial position? Okay, so they've given us our fixed statement of financial position, and we need to now do the changes because they said the bookkeeper did not take it into account. Let's quickly go back to our information so we can see what we are talking about. Okay, so there it is. It says on 1 December, an old vehicle was traded in for a new one at 180. Okay, and then the trade-in value was 125. Okay, we've already taken that into consideration. And then obviously it has then depreciated. So these are the adjustments that we need to now indicate in our fixed assets in our statement of financial position. Okay, so then we will quickly just say we are going to add the new one, which is 180,000. And we need to subtract the old one at carrying value, 131,350. Okay, this is the carrying value that we've calculated. Because remember, we have our carrying value at the beginning, and then we've got our additions. So this is our additions. This is our disposal at carrying value. And then we also need to indicate our depreciation, right, for the year, which is going to be 23,400. Okay. And that will then give us our total of 30,47,650. And that is how you are going to indicate it in your statement of financial position. So you must be able to do the calculation of your fixed assets in the statement of financial position. Make sure that you are prepared, Grade 12, for these type of questions. Okay. So the second question says the following. It says, extracts balances and totals for 28 February. They've given us our debtors control, our provision for bad debts creditors. Then the adjustment says creditors with a debit balance of 10,550 on 28 February must be transferred to the debtors ledger. And you also provision for bad debts must be adjusted to 4% for debtors. I'll quickly just give you 4 minutes to quickly complete this question. See you in 4. Welcome back, grade 12. Now let's quickly go through the calculation. Okay, so this is what you have in front of you. You need to then now indicate the changes that take place. So the first thing that we're going to look at is this transaction over here. The creditors with a debit balance must be transferred. So this is relatively a statement of financial position calculation. Okay, now the question that we have to do right now is indicated accordingly to our trade and other receivables and trade and other payables. Okay, they are talking about a creditor. So I'm just going to go to the next slide to produce space. So when we are dealing with a transfer, we need to take into consideration the following. We've got debtors and then we've got creditors. Okay, our debtors are positive because they are assets and they are negative on the credit side. And our creditors are positive on the credit side and negative on the debit side. Okay, so right now when we read our information says creditors with a debit balance. So it means where are we? We are in our creditors right now on the debit side. Okay, there's a 10,550. Okay, so what do I need to do? I need to change this or transfer this particular creditor to become a debtor. Okay, so what do I need to do? I need to remove the creditor. 10,550. Do you see that it's on the positive of your creditors? So that means that in our trade and other payables, it's going to be a positive. Okay, then for every credit, there must be a debit. So it means I'm going to the debit side of my debtors, and then I'm going to write 10,550. And this is also on the positive side of debtors. So it means in my trade and other receivables, I'm going to be working with the positive. So the most important thing when it comes to transfers, you need to draw your T account and identify which side you are on in the particular transaction. So in this transaction, they told us about creditors. So we went to our creditors T account. They told us it's on the debit side, and then we wrote the amount where it's appearing. So it's appearing on the debit side, as you can see, and the debit side is the negative. So whenever you are transferring, it means then you're going on the opposite side. So it will be a positive for your trade and other payables and a positive for your trade and other receivables. Okay, so normally the signs are the same. So if you've got it on the correct side, you'll be able to get the appropriate answers. Okay, let me quickly go back to the previous slide so that I can fill it in where it needs to be. Okay, sorry about that. Over here, I'm going to say add 10,550, and I'm also going to add 10,550. Okay, now I can then deal with my provision for bad debts. Okay, so provision for bad debts must be adjusted to 4% of my debtors. So what am I going to do? Do you see that my debtors has changed? Because my trade debtors given to me was 688,200. And then now I've added the 10,000, as you can see. Okay, so then what am I going to do? I'm going to quickly just type it into my calculator. 688 200 added with my 10,550. Okay, so that means that my debtors control or trade debtors is equal to 698,750. So then what do I need to do? I know that my provision for bad debts is going to be 4%. All right, so that I multiply with 4%, and it will give me 27950. This is the new provision for bad debts. Okay, this is for this current financial year. But in the previous financial year, our provision for bad debts was 30,450, as you've seen in the information. Okay, this is the previous financial year. You can see it's for the previous year. So every year, our provision for bad debts must change. And as soon as it changes, then we have to adjust it. Okay, so when it changes, then I know what do I need to do with my provision for bad debts. I always subtract my provision for bad debts, right? It has changed. It's no longer 30,450. I can't put it there. So then I'm just going to say 27,950. This is the new one for this current year. Okay, or rather for the next financial year. Okay, so that is how we are dealing with our provision for bad debts. And then we continue then to adjust it in our statement of comprehensive income. Now, in this case, we are dealing with the net profit before tax. But first things first, we need to calculate the adjustment. Okay, so I'm going to quickly draw my T account just to show you what is happening with the provision. So this is the provision for bad debts. It's a negative asset. And then we have our provision for bad debts adjustment. And this is a profit or income or an expense account, depending on the need for the provision for bad debts. It's a negative asset. So this one we show in the statement of financial position. And this one we show, because it's an income and expense, we show in the statement of comprehensive income. Okay, so in this case, this is what we have. The balance wrote down at the beginning of the year was 30,450. Okay, and then the balance at the end of the financial year, 27,950. Okay, so that means that our balance carried down is 27,950. Are we okay? That means that this 30,450, 30,450, there is a missing amount over there, 450. So then what do? I create a new account, which is called the provision for bad debts account. So then, pardon me for that, I will say 30,450 less 27,950, and that gives me 2,500. That's my provision for bad debts adjustment. Okay. So do you see I've debited it? So that means I need to credit it, right? So that will be my provision for bad debts. And that's going to be 2,500. Do you see that it's an income? Because income expense account, positive on the credit side, negative on the debit side. It's an owner's equity, actually indirect owner's equity. So that's what we have over there. So in this case, it's a positive 2,500. That is an income that we are dealing with. So how do I then show it in my statement of comprehensive income? I quickly just go to my statement of comprehensive income. Because it's an income, I will just simply add it, okay? 2,500. Why am I adding it? Because it was not included in this total, okay? And then because I've completed my calculation over here, it's very important for me to know the transactions that take place over here. I add everything together. So we said we have the 688,200 plus 10,550 less 27,950. If there are no other adjustments relative to our trade and other receivables, then we simply write the total 800. Or should it happen that you are running out of time, grade 12s, make sure that you at least total your account so that you can get the operational marks. Okay. Trade and other payables, if there's no other accounts or transactions, you are going to write it in there. Okay. And that is that, grade 12s. Now, let us look at the rent income calculation. Okay. So you're expected to calculate the rent income, and you have been given information over there. So I will give you 5 minutes to quickly complete this question. See you in 5. Okay, welcome back, grade 12s. Now let's quickly look at this transaction. This transaction says, okay, we've been given the rent income that we've received. No problems. This is what we have received so far. So what's indicated in your trial balance is what you have received. Then the adjustment says, it is agreed to increase the rent by 5% on 1 December 2024. First thing, when you are dealing with too many dates, draw a timeline. Okay. Our financial year will start on the 1st of March 2024 and ends 28th Feb 2025. And then there was an increase on 1 December. There was a plus 5%. 1 December. And a deposit of 8,000 is paid before the tenant occupies the building. The deposit was received but not reported. Okay. Rent for March 2025 was received and recorded. Okay. The lease agreement starts on the 1st of May. So what am I doing right now? I'm just drawing my timeline and trying to make sense of the information that's given to me. Okay. So in May 2024, there it is. That's when the lease started. Okay. And then we've received until March. So the problem is this. So we have 2 transactions in this one information provided to us. Okay. So the first aspect, I just want to quickly do this, is the fact that we have to indicate now our transaction, okay? We need to indicate the fact that there was a deposit, right? Now, this deposit is refundable. So that means that the deposit then will go to our trade and other payables because that is the money that we have that actually belongs to the tenant. However, for the fact that it's a deposit, we then have to refund it. Okay. So then that means that it's going to add on to our trade and other payables. Okay. Now the deposit was 8,000. So this 8,000 is the deposit. Okay. It can also happen that we have we contribute a deposit as well, and therefore that will be in the trade and other receivables. But nonetheless, let us focus on this one as the trade and other payables because it is the tenant's deposit that is refundable whenever they actually, the lease is actually expiring. Okay. Now that we've dealt with the deposit, let me quickly redraw this so that it's a little bit clearer for us, okay? So here's the information presented to us. Our financial year starts on the 1st of March, 2024, no problem. It's ending on the 28th of February, 2025. And then we have received for March 2025. We started leasing on the 1st of May, and there was an increment on the 1st of December of 5%. Okay, so then let's quickly then do our simple calculations. The first thing is we need to know how many months we've actually received rent for. In this case, we've received for May, June, July, August, September, October, November, December, January, February, and March. So it's 11 months. Okay. So then some of the months, so from May until December, we were receiving 100% of our rent, no problem. And then from December until March, it changed. We added 105. So it's 100% plus the 5, and it was 105. Okay. So how many months did we have the 100? We had the 100 for 7 months. It's May, June, July, August, September, October, November, right? We don't include December because it had already changed by then. So it's 7 multiplied by 100. Okay. That gives us 700. Are we okay? Then how many months did we have it for 5 months? It was, how many months did we have it for 105? It was December, January, February, March. So for 4 months, we had that, okay? That will give us 420. And that will give us, when we add it together, that will give us 1120. That's the number of months that we've received the rent, okay? And that is represented by 216,000. Okay, so our problem in this case is that we have received too much. This is actually an income received in advance. I've covered this in the previous lessons. Please refer back to your teacher and ask her to display some of the calculations that we did when it comes to income received in advance. Okay, so then I'm going to say we are looking for that 1 month where we were receiving 105. Okay, so then we are going to use the simple UK method where we say what we want over what we have, or the unknown over the known. So we don't know how much we were receiving per month for that 1 month out of the total of 1120. Then we multiply it with 216,000, and that will give us our rent. Okay, so how much is the rent amount? The rent amount will be 20,250. Are we okay? So then I will have the 20,250 over here. Now we are dealing with the correction of net profit. So the question is that in this total, did the bookkeeper include the 20,250 when they reported or not? The point is that the bookkeeper included the whole 216,000. And in the 216,000, we have the 20,250. That is not for this financial year. So it does not belong in this. So then that means that the net profit was overstated. Therefore, we need to subtract the amount from the income that is provided there. Okay, so then also that means that this is an income received in advance. It means that we have their money that they've paid, but we have not provided the service. So therefore, it's a liability on our part, okay? Or rather, we have money that we did not work for. 20,250. That is why I'm putting it at payables, okay? So then that is giving me the amounts over there. So then what do? I add all the amounts under trade and other payables, 150. That is my trade creditors with the deposit and the 20,250 of income received in advance. And then that will give me my 924,400. Okay. And that is the amount. Now, that is how you approach the questions, grade 12. You need to practice so that you are able to perfect these type of questions. Okay. So then here's the homework activity. This is actually a continuation of this activity. Please make sure you go through it. There is also a marking guideline provided when it comes to this question. Just query your teacher. She will give you the answers. Okay. So then this is the summary for what we've covered today. You need to complete the financial statements adjustments simultaneously to maximize the marks. You need to write it in your in your financial statement of comprehensive income, and you also need to put it in your statement of financial position. So they both need to be in your financial statements. Okay. Then inventory and fixed assets are examined on paper 1 and paper 2. And remember that the internal control on fixed assets is examined on paper 2. Okay, then know where to place the negatives or place the statements, expenses, and income, and then also add amounts pre-printed in your answer book, and then always show your workings. Okay, so those are the tips, and that is what we've covered so far. And with in the next lesson, we'll be looking at our cash flow statement and application of the adjustments in our cash flow statement. Now, with that said, grade 12, good luck for your exam. Make sure that you prepare thoroughly and make it count. All the best.